Welcome to this video presentation, How to Avoid Getting Burned in the Markets, presented by FFR Trading. In this series, we'll equip you with practical trading and investing knowledge while helping you to avoid the many pitfalls and mistakes many traders and investors make. In this week's video, we'll discuss hypothetical track records and licensing. But first, let me introduce you to who we are here at FFR Trading and what our role is. FFR Trading is a due diligence firm for various investment and trading services. We've worked with dozens of traders in all markets, including stocks, options, futures, and Forex. In a nutshell, we've uncovered the mistakes so many people make when considering trading or investing strategies. Our goal is to find solid investment and trading opportunities that we can pass along to you. We hope that this video can help you avoid some of the pitfalls many investors fall into and help provide a primer on the markets. Though not a comprehensive thesis on the subject, for advanced education on the markets, we will discuss the unlimited literature available on specific topics. Chapter 7. Hypothetical Track Records and Licensing. In this section, we'll use a hypothetical Q&A to discuss several legal issues that crop up on websites that offer trading or investment services. Question: what is the difference between a hypothetical track record and a real one? In the purest sense, a truly hypothetical track record is based only on backtesting. The trade shown never took place in live markets. The data used to test the trading strategy is only historical. These kinds of track records aren't all bad. Just keep in mind that they have no forward history in the markets. If you decide to trade these strategies with real money, don't expect the results shown from the backtest data. Also, consider that hypothetical track records are often curve-fitted to maximize gains, but could never really be traded in real life. The system developer keeps fiddling with the rules and settings in order to maximize profitability over the period of time tested. There is no guarantee that this over-optimized system will work just as well going forward with real money. Question: some track records seem to show legitimate real money trades, yet they still have the hypothetical performance results disclaimer on the website, or even say that the track record itself is hypothetical. This makes no sense. Why do they do this? Well, it's important to realize that hypothetical does not always mean that the trades you see on the track record are not real. Due to federal regulations by the CFTC and SEC, all track records are required to have the infamous hypothetical disclaimer. The reason for this is that technically not every single person who placed the same real trade as shown on the track record entered the trade at exactly the same price or sold at exactly the same price. According to the regulators, even less than a penny's difference makes the trades hypothetical. Licensing question: when are traders or investment firms required to get registered or licensed? They're required by law if they offer specific advice tailored to your specific investment needs, or if they manage a large amount of money. For example, a licensed advisor may tell Mr. Smith to buy Microsoft stock based on his specific investment goals, and tell Mrs. Wilson to buy Walmart stock based on her specific investment goals. Question: why aren't all investment or trading related websites required to be registered or licensed? They don't offer specific personalized investment advice tailored to each particular customer's needs, and they rely on what is called the publisher's exclusion from the definition of investment advisors as provided under Section 202A11 of the Investment Advisors Act of 1940 and corresponding state security laws. These websites publish general and regular circulation information and offer only impersonalized investment-related advice. It's important to realize that just because a trader or firm isn't registered or licensed doesn't necessarily mean they are fraudulent. As always, do your research. To research the licensing of individuals and companies, please utilize the following links. These links will also be included below the video. For someone who claims to be a registered investment advisor, Securities and Exchange Commission, or SEC, That's www.sec.gov/investor/brokers.htm. For someone who claims to be a commodity trading advisor, CTFC, the Commodities Futures Trading Commission, www.nfa.futures.org/NFA-registration/CTA/index.html. In conclusion, know that there is still money to be made in the markets. Take it slow. Find strategies that match your unique personality. If possible, work with a trading team or at least one other person. They'll be able to see your blind spots when you can't. Above all, don't trade with money you can't afford to lose. At the end of the day, it's only money. Your family, friends, and your health matter most. Aim for a balanced life. If you aren't getting some enjoyment out of trading or investing, then chances are you might be in the wrong profession. Thanks for joining us. We hope this video has helped you on your journey to success in the markets. If you would like to obtain your own copy of our book, How to Avoid Getting Burned in the Markets, email us at support@ffrtrading.com.